In today's video, I'm going to discuss my September 14th energy update. In my August 31st update, I explained that we had just recently moved out of a buy zone. And back in 2016, when we moved out of a similar buy zone, prices remained higher for the following 3 years. In the text below this video, you have a hyperlink to that August 31st report, which will give you more detailed information. In my August 31st report, I explained why supply-demand factors were supporting a very similar scenario this year. The EIA has recently released reports stating that production is going to be decreasing as we go into the latter part of this year and significantly as we go into 2021. Against this, we're also going to be seeing increased exports. Now, exports are primarily going to overseas, Asia, with liquefied natural gas, but also through pipelines going to Mexico. In both areas, we're expecting to see significant increases in exports. This combination of decreased production and increased exports will support higher prices as we go into 2021. If the EIA's forecasts are correct, then pullbacks to the buy zone should be considered buying opportunities. And I believe that's exactly where we are today. As you can see in this chart, similar to 2016, after moving out of its buy zone, natural gas has pulled back towards it. In my May 12th energy update, and again there's a link in the text below to that report, I said consolidation patterns form when traders are positioning themselves for long-term moves. And the longer it takes for the pattern to form, the higher the subsequent move tends to be. This is especially true when the consolidation pattern is formed at historically very low price levels. In 2016 and 2020, natural gas consolidated within their buy zones for 6 months prior to moving higher. In 2016, after moving out of its buy zone, prices consolidated above its zone for a short time prior to moving higher. I believe, like 2016, we are presently consolidating above this year's buy zone. And this will give traders time to build their positions before prices move higher. If you have not already protected your business against the probability of higher prices, I recommend you take advantage of prices consolidating above this year's buy zone and secure rates before they move higher long term. Over many years of trading, I've learned that past performance does not guarantee future results. But I believe the EIA's estimates of production and demand, along with the empirical evidence contained in today's chart, support the likelihood that the price of natural gas, the average price, will be significantly higher over the next 3 years. Therefore, if you have not already locked in your electricity and natural gas rates, I recommend you do so as the natural gas market pull back towards this year's buy zone. I hope this video helps you appreciate the wisdom of locking in today's low natural gas and electricity rates, and not delay hoping for lower rates. My concern is, if you delay, you may be paying much more later on. And until my next video, please take care.